In this video, we are going to talk about the different scenarios for product sales. We will cover order types and transaction types, payment requirements, payment terms, invoice categories, payment links, email templates, and PDF templates. Let's start with order types. Quote, sales order and sales order and invoice. There are two ways to create new orders. Online sales such as Shopify and web portals, and team sale using the CRM order form in Zoho. Online sales can be all of the three. Quote, this is an open shopping cart that is not yet checked out. The transaction type is called a provisional order. If the customer does not check out, it will become an aborted shopping cart. Sales order. This is an online order that does not have a monetary value, such as digital downloads. The transaction type is called a committed order. Sales order and invoice. The transaction type is called a confirmed order, as it's checked out online and is fully paid for. When a team member processes a sale, they use the CRM order form. Once the products have been selected, they click on the Submit button. First step is to confirm the order details. Click on Next to continue to shipping details. Confirm this information, then continue on to the billing details. In the Billing tab, you are prompted to select the payment requirements. The option selected will intuitively update the payment term options. If the order has no monetary value, as it's for free samples, including free shipping or digital downloads only, these fields do not need updating. The payment requirements and the payment terms are populated from the accounts, but you can edit them if required, as each order may have unique circumstances. Each inquiry record stores the payment requirements and terms for each order. If your payment requirement selected needs immediate payment, there is an option to tick the Pay Now checkbox. This updates the buttons so you can process the payment over the phone. Otherwise, leave this unticked and proceed with the quote option. In the inquiry, you can follow the blueprint process and use the templates provided with Approval and Pay Now buttons. If your order already has approval and does not require a deposit or upfront payment, you can proceed straight to the sales order or sales order and invoice. In this video, we will help you to understand more about these options, to help you decide which ones to use. Let's start by looking closer at the payment requirements. There are 6 options. Free order, deposit payment upfront, full payment upfront, payment before delivery, invoice on dispatch, and e-commerce orders. These options will help you determine which order type to use. The free order is for sales that have no monetary value, including a free shipping. This option may be suitable for samples and digital downloads. An invoice will not be generated for free orders. If a partial payment is required upfront, for the sales team to process an order, the payment requirement is deposit payment upfront. This payment creates a prepayment, which is later credited to the final invoice. The deposit must be paid before the order can be processed. Full payment upfront means the customer must pay the full amount before the order can be processed. Payment before delivery means the order can be processed but the balance must be paid before the order can be dispatched. This option is suitable for indent orders, where the client can pre-order but the goods have not been received from the supplier or factory. Invoice on dispatch means the invoice is generated the day the goods are packaged and ready to dispatch. This option may be used if the customer has approved payment terms, such as 30 days to pay the invoice, but the due date of the invoice must be calculated from the date of dispatch. E-commerce orders is only for online sales, not for orders processed via the sales team. Now if we look at the order type with the payment requirements, the options look like this. There are 12 scenarios to support your business requirements for both online orders via Shopify, plus sales created in Zoho by the sales team, using the CRM order form. The difference between Scenario 4 and Scenario 7 is whether the order is approved. With Scenario 4, the payment must be received before the goods can be allocated to the order. Orders that are still a quote will not appear in the pick list and dispatch pipeline until the invoice is paid. If the invoice is not paid on Scenario 4, the inquiry is simply cancelled and the invoice is voided. As the order is not in your pick list and dispatch pipeline, no further action is required. With Scenario 7, the order is pre-approved but payment must be received to ship the goods. These orders will appear in the pick list and dispatch widget, allowing you to allocate the stock but blocks the picking and packing of the order until payment is received. We recommend that you only use this option if the client has formally approved the order, as this process requires a cancellation process if the order is not paid for. Refer to the cancellations and returns process for more information. When an invoice is created, the due date of the invoice is automatically calculated based on the payment terms. There are 3 categories of payment terms: no terms required, no payment terms, and approved payment terms. If the order has no monetary value, then no terms are required, as an invoice is not generated for free orders. If a customer does not have payment terms, the invoice is always due immediately. This means the due date of the invoice is the date the invoice is created. This generally applies to retail customers. If the customer has approved payment terms, there are 8 options available. These options can be stored under the account record and automatically copied into new inquiry records. However, if the account is in arrears, if they have exceeded their credit limits, you may wish to change their payment terms on a case-by-case basis. You can override the account payment terms for each order placed. There are 8 payment term options: net 7, net 15, net 30, net 45, net 60. The number in the payment term determines the due date of the invoice. It is calculated from the date the invoice is created. For example, if today is the 1st of the month and net 15 is selected, the due date will be 16th of this month. But if the invoice is not created until dispatch, the 15 days is calculated from that date. The other payment term options are due end of the month, due end of next month, due on the 20th of next month. The due date will calculate based on the date the invoice is created and the payment term selected. Let us look how payment terms apply to our scenarios. Next, we are going to look at the invoice categories. You have a few types of invoice categories: no invoice, transaction invoice, Proforma Invoice, and standard invoice. Let's understand a bit more about these. A transaction invoice can be used with payment gateways, such as Stripe or PayPal. These merchant facilities deposit the funds in your bank account as one lump sum for all invoices paid. These deposits to your bank can take a few days from when the customer paid. Reconciling these lump sum payments can be time-consuming. You have to compare your expected sales against your payment gateway statement to ensure the money is received for all your orders. To make this process simpler, these invoices can be categorized as transactional invoices and consolidated when you receive the payment in your bank. Customers can still receive an invoice and receipt of payment, but your accounting system only has one invoice, which is a consolidated invoice that matches the amount paid into your bank, including the merchant fee details. Watch the consolidated payment process for more information. A Proforma invoice is used for deposit payments. This is treated as a prepayment in your accounting system, and the funds are allocated to your balance sheet. When the final invoice is raised, the prepayment amount is credited to the invoice and automatically debited from your balance sheet and credited to your profit and loss income accounts. Any Proforma invoices paid using merchant accounts are reconciled with transactional invoices under the consolidated payment process. Finally, we have standard invoices. These invoices represent the full value of the item sold and the quantity invoiced. You can invoice the quantity dispatched, which may be less than the quantity sold. This process supports splitting your order into multiple dispatches. However, this is different to a deposit. For partial payments, use the Proforma payment process. For example, if you needed a 50% deposit payment upfront, do not half the quantities, or reduce the unit price, or add a discount to create a deposit invoice. The Proforma invoice process will use a deposit product for 50% of the order value, which can be credited against the line items when the standard invoice is due. Let's see how the invoice categories are applied to the business scenarios. When an invoice is paid, the client will either pay the funds into your bank account or use one of your merchant facilities. Typical merchant facilities are Stripe, Square, and PayPal. To use a merchant facility, a Pay Now link is generated and sent to the customer with a quote or invoice. The client clicks on the link and makes payment. The Pay Now link can be generated using either Zoho Forms or your accounting software. This can be either Xero or Zoho Books. If the Pay Now link is for the full payment of a submitted quote, the Pay Now link is generated using Zoho Forms. The successful payment will automatically generate the transactional invoice. If the Pay Now link is for a deposit payment of a submitted quote, the Pay Now link is generated using Zoho Forms. The successful payment will automatically generate the Proforma Invoice. If the Pay Now link is for payment of the items on a confirmed sales order, either before or after dispatch, the Pay Now link is generated by the accounting software. All payments via merchant facilities and bank transfers are synced in both your accounting system and Zoho. Let's place this information into the matrix. Now let's look at what templates are used to send your quotes or sales order confirmation details to the client. After you have created the order and confirmed all invoice and payment details, you will be prompted to choose your email and PDF templates. Let's look first at the email templates. There are 3 options available: submit a quote with Pay Now link, submit a quote, approval button, and sales order confirmation. For the PDF templates, you have these options to select: quote or sales order confirmation, with or without product descriptions, with or without discount details, and for quotes, with a Pay Now link or approval button. Using these options, there are 12 template combinations as shown here. If you want to attach a PDF copy of the quote or sales order, this template can be automatically generated and added to the inquiry under the record attachments. When you send an email, you can attach the PDF document. If you do not need a PDF attachment, the email can be automatically sent with the order details included in the body of the email. Please note, all quotes include a decline quote link to automatically update the inquiry if the customer chooses not to proceed. Now let's add these final details to the table to see all the scenarios and combinations. Zoho has been configured to make this process as simple as possible, to guide you through the process, making it feel quick and easy.